Hey everybody, Rob Maurer here, and today we are mostly talking about Tesla's stock price. Yesterday we talked about the probably most significant news, as weird as it is, of the last couple of days, with Tesla's release of the shorts. I see that as an indicator of the successful second quarter that Tesla just closed, and it seems that the market agrees Tesla stock on the day today finished up 13.5% to $1,371.58, a $163 increase on the share price today alone. While Tesla stock has seen bigger percentage increases in a single day before, this is the largest dollar change we have ever seen in the company's history, by quite a bit, actually surpassing the previous high of a $129 increase on the stock back on February 3rd. No signs of slowing down in the after-hours session either. Right now, as I'm recording, Tesla is trading at about $1,425 per share, up another roughly 4% in after hours. Because of that, I'm sure many listeners have seen the biggest increases in their portfolios in history as well, so congratulations for those of you seeing that success. As always, no financial advice here, but I did want to share my thoughts on the stock as we continue to hit new all-time highs. As I said, I think today is a continued reaction to last week's delivery report and the realization that Tesla is likely to post a second quarter profit, which just increases the long-term outlook for the company. If they can post a profit in a challenging quarter like Q2, what's going to happen when they have a clean quarter? And then how do those clean quarters continue to stack on each other? Those are the types of things that the market is starting to figure out. And then, of course, we have the S&P 500 potential inclusion looming, which will require a lot of tracking funds to purchase Tesla stock. I've gotten quite a few questions on how that process works. I'm still doing some research on that, so it is a topic I do plan to come back to. But one of the things I wanted to address today is just how actual price increases in stocks happen, specifically as we think about the market cap. I mean, we've seen Tesla's market cap increase by $50 billion, $100 billion here in just a matter of days, which I think brings up the question of how that's even possible and if that sort of price action is sustainable. To understand how quickly a stock price can change and therefore a valuation of a company can change, I think it's important to understand what those terms actually represent. The market cap or the valuation is just the sum of the total outstanding shares. So if you have a company that has 10 shares and each of those shares is $100 each, the market cap for that company would be $1,000, but that market cap can change really dramatically without all that much new investment. For this example's sake, let's say that, 9 of these 10 shares are locked up, and for whatever reason, they can't be sold due to some prior agreement. This is actually the case for the shares that Musk will earn through his compensation package. Once he exercises those shares, he can actually sell them for 5 years. So let's say that's the case in this example as well. That means that while there are 10 outstanding shares impacting the valuation, only one of those shares could be bought or sold. So let's say for that person that owns that one share, someone comes to them and says, hey, I see that this was last valued at $100, but I'd like to give you $110 to purchase that share from you. That person laughs and says no, so they keep negotiating. This person offers $200, $300, $400, $500, and finally at $500, the owner of the share finally capitulates and says, okay, I'll sell you the share for $500. They complete that transaction. So now, despite the fact that only one share has been sold, all 10 shares of the company are valued at that $500 price. So the market cap or the valuation of the company went from $1,000 to $5,000 simply from one trade that cost $500. In this case, only $500 of money actually traded hands, but $4,000 in valuation was created because those other 9 shares are now valued at $500 a piece rather than $100 a piece. Now, all of this assumes that there are other buyers that would pay that same price, and it's not just this one person that paid the $500 significantly overpaying, but this is just an illustrative example taken to the extreme to demonstrate how quickly a valuation can change if there are limited amounts of people that are actually willing to sell their shares. This is the same basic concept behind a short squeeze as well. There are just people that need to buy the shares that can't buy the shares because no one sells them at the given price. It could just be one guy that needs to buy one share and he needs to pay $5,000 for that share of Tesla before someone will sell it to him. And if that happened, that would technically create hundreds of billions of dollars in Tesla valuation. Now, obviously, a situation like that would quickly change because people would then say, oh, by the way, I'll sell you my share for $5,000 right now. And that's essentially the whole price discovery process that the market is going through as buys and sells are happening. So hopefully that helps provide some quick context on how these quick price changes can happen even at these high valuations. Clearly, a very significant portion of Tesla's outstanding shares are held by people that are going to hold it for the long term and see the potential for Tesla to be a multi-trillion-dollar company. If enough shareholders feel that way and new prospective buyers come to that realization and want to buy in, suddenly it becomes very expensive for those new buyers to get the shares that they want. And bringing this back to S&P 500 inclusion, well, that represents a significant pool of new buyers. Anyway, suffice it to say that even at these new all-time highs, personally, I am as invested as I have ever been because I am one of those long-term shareholders that has locked my shares away for 10 years at least because I see a very strong path to multiple $1 trillion of valuation. What I care about is my share count, not what someone is willing to pay me for those shares today. That's pretty irrelevant to me until I no longer see a path to 10xing from that price. All right, next up, I wanted to go through some analyst updates since the delivery report. I think we have 4 price target increases here. We'll start first with Dan Ives of Wedbush. Last week after the delivery report, they increased their price targets. They have both a base case and a bull case. So they got a lot of press for increasing their bull case price target from $1,500 per share all the way up to $2,000 per share. Wedbush said, quote, "In our opinion, a 90K delivery number in this COVID lockdown environment is a jaw dropper, and the bulls will run with this as a potential paradigm changer moving ahead. China appeared to be the star of the show and was a major source of strength in the second quarter based on our analysis and industry data." End quote. In terms of their base case, Wedbush increased their price target from $1,000 per share up to $1,250. Not to be outdone, JMP Securities analyst Joseph Osha raised his price target today on Tesla from $1,050 per share up to $1,500 per share, which, as far as I'm aware, this is the only price target on Wall Street ahead of the current share price of Tesla stock. Sometimes when I say stuff like that, people come back with ARK Invest. They have a $7,000 price target on the stock, but that is a 2024 price target. Generally, when we talk about the analysts and when FactSet compiles their consensuses, those are either current day or 12-month price targets. So you'd have to discount ARK's back, and every analyst seems to use a different discount rate. Anyway, alongside the increased price target from JMP Securities, analyst Joseph Osha noted, quote, "Tesla delivered significant upside to our estimates and the consensus outlook for second quarter 2020 deliveries, reporting a total of 90,650 units as compared to our estimate of 73,800 and the consensus figure of 70,300. All of the upside appears to have come from Model 3 and Model Y deliveries, which the company reports jointly. We reiterate our market outperform rating and raise our price target to $1,500 from $1,050. Our target is now based on our belief that Tesla is positioned to become a $100 billion company with 20% earnings before interest, tax, depreciation, and amortization margins by 2025, with that outcome discounted back to the present." End quote. So there's that discounting that I mentioned, but in terms of their math, I don't have the full note, but $100 billion in revenue could mean they are projecting something like 2.5 million cars at a $40,000 average selling price, but of course that wouldn't factor in revenue from things like service or Tesla Energy, etc. Deutsche Bank analyst Emmanuel Rosner also raised his price target on Tesla from $900 per share to $1,000 per share, citing the stronger delivery number. And then our favorite, we saw an update from JP Morgan's Ryan Brinkman, who has now lined up a couple quick increases on his price target here over the last month, first from $250 to $275, now from $275 all the way up to $295. Remember, as we have talked about previously, Brinkman's price target is based off of a 2021 earnings number discounted back to this year. Of course, that's never going to justify Tesla's valuation. Tesla's valuation is based off of the upside for the next couple of decades. So those are the updates from analysts that I have seen. If I missed any, please let me know in the comments. But next up today, I want to talk about a report from Korean news outlet News One on LG Chem expanding their battery production for their partnership with Tesla. The translated report, which was out late last week, says that according to industry sources, LG plans to convert a portion of their cylindrical battery production line in a South Korean battery plant to Tesla production to supply growing demand in Shanghai. Again, in a translated quote here, the report says that an industry insider said, quote, "Because LG Chem's battery production in China is short of demand, it seems that it will increase production in Korea and supply it to Tesla." End quote. Now, this could mean that LG production is simply lagging behind what they had hoped it would be in China, or it could mean that Tesla's demand is simply ahead of where LG had expected. So you could either interpret it as a bearish signal on Tesla's production outlook from Shanghai, or a positive sign of strong demand, or I suppose anywhere along that spectrum. In the next few days, we should be expecting reports out of China for both registrations and production for Tesla in China for June, which will hopefully add some context around the Q2 numbers and allow us to extrapolate better for Q3 and Q4. I'm definitely looking forward to walking through updated forecasts for those quarters. That'll wrap it up for today though. As always, thank you for listening. Don't forget to subscribe and make sure you're signed up for notifications. Also, make sure you're following me on Twitter at Tesla Podcast. And I'll see you tomorrow for the Tuesday, July 7th episode of Tesla Daily. Thank you.